Ladies and gentlemen, good day and welcome to Sathlokhar Synergies E&C Global Limited Q4 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Acharya from Kirin Advisors. Thank you, and over to you, Mr. Acharya.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Sathlokhar Synergies E&C Global Limited. In the management team, we have Mr. G. Tyagu, Promoter, Chairman, Managing Director, and CEO. With that, now hand over the call to Mr. G. Tyagu. Over to you, sir.
Happy afternoon, everyone. On behalf of Sathlokhar management team, I welcome you all to Sathlokhar Synergies E&C Global Limited Q4 and FY26 earnings conference call. We appreciate your participation and continued interest in our company. FY26 has been a defining and exceptional year for us. During the year, we achieved record order inflows, crossed INR 800 crore revenue milestone, significantly strengthened our execution capabilities, and continued expanding our presence across multiple high-growth industrial and infrastructure segments. Established in the year of 2013 and headquartered in Chennai, we are an integrated EPC turnkey construction company providing end-to-end execution services across design, civil works, PEB structures, MEP systems, solar installations, interior fit-outs, utilities, and statutory approvals. We execute projects across industrial, warehousing, commercial, healthcare, institutional, hospitality, pharmaceutical, textile, food processing, and renewable energy sector with a strong in-house execution capabilities and pan-India delivery presence. What differentiates us is our fully integrated execution model with a dedicated in-house architecture, structural, civil, PEB, and MEP teams enabling better project control, faster execution timelines, cost efficiencies, and superior delivery quality. Over the years, we have built strong execution credibility supported by experienced leadership, digitally enabled project monitoring systems, and a diversified repeat client base. Over the last 9 years, we have invested more than 7 crore towards targeted marketing and business development initiatives, generating over 60,000 leads and 23,717 plus active prospects, helping us build a strong long-term demand pipeline. Our outreach includes participation in 29 plus industrial and construction expos across India, along with airport hoardings, television campaigns, and print media visibility across key industrial markets. Coming to the key operational development, since January 2026, one of the most important milestones was the foundation stone laying ceremony of our state-of-the-art PEB manufacturing facility conducted on 28 January 2026. The facility is expected to be inaugurated on 30th August 2026 during the company's annual day celebrations. This initiative marks an important step towards background integration and expected to improve supply chain control, execution speed, operating efficiencies, and overall margin profile through enhanced in-house manufacturing capabilities. The facility will cater to both captive project requirements and as well as external customer demand. Over the next 5 years, we plan to scale this vertical aggressively with multiple PEB manufacturing facilities across India. This expansion also aligns with our broader strategy of building an engineering-led organization rather than a conventional labor-intensive construction company. Our core focus continues to be on PEB, MEP, transformers, utilities, and automation-driven execution. Today, only around 30 to 35% of our operations demand a conventional civil labor, while the majority of execution is driven by engineering and technical professionals, and this model enhances scalability, execution speed, operational efficiency, and margin stability. Another important achievement during the quarter was obtaining the prestigious Class 1A PWD contractor registration, the highest category of the registration under the Public Works Department. This strengthens our technical positioning and significantly enhances eligibility for large value infrastructure and civil work projects. I am pleased to share that our current confirmed carry forward order book work to be executed stands at INR 700 crores as of today, providing strong revenue visibility for the coming period. In addition, we have submitted bids aggregating to approximately INR 19,831 crores with both existing and new clients. Historically, we have maintained a bid conversion ratio of approximately 10% to 12%, which gives us strong confidence towards sustaining future growth momentum and achieving our targeted expansion plans. Coming to the financial performance, we delivered outstanding growth across all major financial parameters during both Q4 and FY26. For Q4, FY26 total income stood at INR 278.66 crore, registering a strong year-on-year growth of 48.33%. EBITDA increased by 105.32% to INR 43.95 crore, with the EBITDA margin improving by 438 basis points to 15.77%. Profit after tax for the quarter stood at INR 30.26 crore, reflecting a growth of 64.59%, while earnings per share increased to INR 12.16. For FY26, total income crossed INR 823.56 crore, registering a strong year-on-year growth of 121.30%. EBITDA rose to INR 117.88 crore, with the margins improving to 14.31%. Profit after tax stood at INR 82.32 crore, reflecting a robust year-on-year growth of 141.03%, while earnings per share increased to 33.08, up 112.32% on year-on-year. The standalone financial results of the company have been prepared in accordance with the recognition and measurement principles laid under the Indian Accounting Standards prescribed under Section 133 of Companies Act 2013, read with the relevant rules issued thereunder, other accounting principles generally accepting in India, and Regulation of 33 of SEBI, Regulations 2015 as amended. The financial results of the quarter and year ended March 31st, 2026 represent the first financial results of the company prepared in accordance with the Ind AS. The company has adopted Ind AS with effect April 1st, 2025, with April 1, 2024 being the transition date. Accordingly, the comparative financial transformation for the quarter and year ended March 31st, 2025 has been restated in compliance with Ind AS 101, first time adoption of Indian Accounting Standards. For certain contracts, advances received from customers prior to the incurrence of related project costs are recognized as contract liabilities and are subsequently adjusted against revenue upon the incurrence of costs and satisfaction of the related performance obligations in accordance with the company's accounting policies. Pursuant to the adoption of Ind AS, the balances appearing in the balance sheet and statement of the profit and loss have been restated. Consecutively, certain line items and financial metrics of the current and comparative periods may not be directly comparable with those previously reported under the earlier accounting framework. We believe this performance reflects our strong execution capabilities, operating leverage benefits, diversified sector presence, and continued focus on operational efficiency. From an industry perspective, we continue to witness strong private sector capital expenditure across manufacturing, warehousing, renewable energy, and electronic sectors, increasing investments towards factory expansions, logistics parks, industrial campuses, and export-oriented manufacturing facilities continue to create healthy opportunities for integrated EPC and turnkey construction companies with strong execution capabilities and fast-track delivery strength. At the same time, we are witnessing gradual consolidation within the EPC and industrial construction sector, with fewer players possessing the technical capabilities, execution bandwidth, and compliance standards required for a large-scale project. We believe this evolving industry structure creates meaningful opportunities for established and execution-focused companies such as Sathlokhar to expand market share and participate in larger projects. Looking ahead, our focus remains on expanding execution capacity, strengthening our backward integration capabilities through the upcoming PEB manufacturing facility, improving operational efficiency, scaling our pan-India presence, and continuing to build a strong and diversified order pipeline. From an executive perspective, we continue to maintain a strong competitive advantage through labor retention and manpower readiness. Despite labor migration challenges across various regions, we have successfully retained our core workforce 5,500 plus laborers through long-standing relationship and a stable subcontractor ecosystem. We have further strengthened our engineering and project execution teams and maintained reserve mobilization capacity to ensure timely execution of upcoming projects without resource constraints. With a healthy order book, robust bid pipeline, and improving business opportunities, we remain confident about sustaining our growth momentum over the coming years. With this, I would now like to hand over the call for further discussion and question and answer. Thank you all.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Suyash Jayawant Mantri with Mangaldas Vinichand Trades and Investments LLP. Please go ahead.
Hello, sir. Am I audible?
Yeah. Happy morning. Yes, sir. Go ahead, sir.
Happy morning, sir. My question was with new political party coming in power in Tamil Nadu, do you expect any negative impact in getting new orders as well as executing ongoing projects, and will it affect the receivables?
Sir, can you please repeat the question again, sir? Sorry, sir. Your voice is louder.
1 second.
Mr. Mantri, please, can you speak a little louder? Thank you.
Yeah. With new political party coming in power in Tamil Nadu, do you expect any negative impact in getting new orders as well as executing new ongoing projects? Will it affect the receivables?
Sir, we are very positive when it comes to Tamil Nadu. At this juncture, the current the new CM and the whole team, they are looking at correction-free government proceedings when it comes to government projects as well as private investments front. I hope we are very positive, and I'm sure even Sathlokhar can participate even for government tenders, not like earlier we avoided. I hope things will change in Tamil Nadu in a positive vertical growth path. That's what I understand from the government now.
Okay, so there will be no effect on the receivables, right, in the projects or order?
Yes. Hopefully all our clients who have already invested land, they will definitely proceed to invest and execute the projects. The only challenges currently what we are facing on the war front, and because of the war and the fuel and some of the material costs up and down on weekly basis, that's the only threat. Otherwise, once the war become normal, things will go properly and everybody look for the opportunity cost instead of waiting for this material cost. So we are very positive on that front.
Okay, sir. So my next question was, so apart from Tamil Nadu, which other states you are focusing on, and how much orders do we expect from the other states? And from the bid pipeline of 19,800 crores, what is the bid pipeline from outside Tamil Nadu?
Sir, thank you very much for raising this question. As a company, our performance for the last 2 years, only 40% with respect to Tamil Nadu, apart from out of 100. So 60% of the projects we executed the last 2 years, and even for the future also, our focus is more on not only restricted to Tamil Nadu, but of course what you mentioned is the last year our turnover from the Tamil Nadu is restricted to 40, the balance 50% from the outside Tamil Nadu. As you correctly mentioned, at this juncture, we are concentrating more apart from, of course, with Tamil Nadu and also our neighboring states, including Maharashtra and also Varanasi and Odisha. So the bids where we have participated, sure, those states also flourishing. I'm sure across India, all the states are now in upward direction. We are pretty confident that in next 20 years, the EPC segment industrial growth would be much better than the older years.
Okay, sir. So can you give me any number like out of 1900 and 19,800 crore bid, what is the Tamil Nadu bid and what is outside?
Sir, around 9,000 plus crore would be from Tamil Nadu. Others are from other states, including some of the offers we submitted in Sri Lanka.
Okay, sir. Thank you. That was my question. Thank you.
Thank you.
Thank you. Next question comes from the line of Sudhir Beda, Beda Family Office. Please go ahead.
Yeah, sir. Thanks for the opportunity and congratulations on good set of numbers.
Thank you, sir.
Sir, my question, recently we have not won any orders. So order book is 700 crore. So how much orders you will win and the execution you will do in the current financial year? So what is the target of revenue for the current financial year?
Thank you very much for raising this question. On the date of 1st April 2025, when we have commenced the last financial year, our carry forward order was 300 plus crore. And thank God, and we have now, it is above 700. That means almost we are doubled up the carry forward, doubled up the turnover. And with that trend, the purpose of referring the old one to give you clarity that when we commenced 1st April 2025, we had 300 plus crores. When we are commencing from April 2026, we had 700 plus crores. And for sure, the ongoing projects, wherever we execute projects, those 6-7 projects, we are now executing phase 1. Obviously, the intention of continuing at those projects, already we have established our overheads, and those clients are also very positive, and we would be continuing to get further orders from the same segment. Actually, we had mentioned, including where we execute, we have platform to perform to get phase 2, phase 3, phase 4 orders. And some of the projects where we are now executing, they have 4 years business model wherein they acquired 400 acres, 600 acres, 700 acres, some of them 250 acres. So for sure, the ongoing existing clients itself, we are expected to book 500 to 600 crores further within this financial itself. We'll receive the orders, we'll bill, and the turnover will come to the existing over and above 700. So for our confidence that 700, the carry forward plus 500 to 600 crores worth of orders from our existing clients itself will get. Even though we have participated, it is well within the 19,000 plus crores. That's the reason we have mentioned existing and new clients, we have participated 19,000 plus crores. And our conversion rate in the past also, minimum 10% is there. In fact, 12 to 15% is, even if you convert conservative 10% itself, a good number wherein we would be in a position to complete and achieve our guidance for this financial year.
So the turnover would be approximately 1,200 crores. That's what you are saying?
We are saying above 70%. Our guidance is for this financial year above 70%, sir.
Above 70% of what?
From the last year turnover, 820 plus 70%. Over and above.
Oh, that's great. So it's almost 600 crore more. Yeah. And sir, but last year also you have guided good turnover around 1,000 crore, 900 to 1,000 crore. But that guidance was not met. So this time you are confident that 70% over and above the FY26 numbers you will be able to clock that kind of turnover?
Sir, even the past also, as you know, that we had scaled up, as I mentioned repeatedly, from 87 to 247, 247 to close to 400, now that 400 to 800. For sure, as we have already been worked with various clients, our own existing clients itself, we are expected another 500 to 600 crores. We have 100%, our confidence and guidance would be for sure above 70% than the last year's performance. Yeah.
Oh, sure. And as you said in the opening, your prefab facility will start from the August, 30th August, from the September onward, right?
Yeah, from September onwards, yeah.
So what kind of margin you will be able to do in the second half of the year? Because the major turnover will come in the second half. So what will be the improvement in the EBITDA margin after the commencement of backward integration?
Sir, to answer your question, in our business model, as I mentioned, overall 100%, 35 to 40% civil, 40% PEB, 35, and balance is 30% for utilities and MEP works. So 35% contributing from PEB sector. So if not whole 100% of the financial year, for sure the H2 would be much better than the H1 when it comes to PEB growth in the bottom line. We are expecting to improve the bottom line. For the whole financial year, we are trying to improve 1% on the bottom line. For the half of the financial year, we may expect 5% growth from the last year's performance.
Thank you. Thank you for the opportunity and all the best.
Thank you very much, sir.
Thank you. Next question comes from the line of Tahir Hyderabadwala with Golbis Fund. Please go ahead.
Thank you. Hi, sir. Can you hear me?
Yeah. Happy afternoon. How are you, sir? Go ahead, sir.
Congrats on the good set of numbers and thank you for the opportunity, sir. Sir, I have 3-4 questions. First, regarding you have delivered great numbers, double the top line, as you have mentioned already. One question on the balance sheet front. There was a line item, other current asset, which increased from 50 crores to 340 crores. Can you provide a breakup what does it include, like unbilled revenue, contract assets, or anything on that side? And what is it about? Like it has gone from 50 crores to 340 crores.
Yes, sir. Sir, the significant increase in the other current assets is on account of the unbilled revenue, sir. It includes the unbilled revenue to the extent of 234 crores.
Okay. And in how many months this will be created? This will be encased?
You're not audible, sir.
Between 90 to 120 days, sir.
What, sir? 120 days?
Yeah, yes. Maximum.
Okay. And sir, also on the receivable side, it has come down from 108 days to 34 days. It is a great number. But was this because of the reclassification to other current assets? Or this 200 number which you said is a new number?
No. This one and the earlier part you asked on account of unbilled revenue, that is a significant increase that is there. And the other part you are asking about the trade receivables.
Yes. I am talking about trade receivable days decreased from 108 days to 34 days. So this can be because of the receivable. We may have shift some of the receivable to other current assets to unbilled revenue. Is this a way, or unbilled revenue which you mentioned of 200 crore is a whole new order, or is anything?
No, this is part of this. Unbilled revenue is of the existing customers only. This one is separate. This is a bill raised to the customer. The trade receivable is whole of the contract work done and bill raised to the customer.
Okay,
yes, please.
So we can see the similar levels of working capital days going forward?
Yes.
Okay, sir.
Your next question, please.
Yes, sir. Just one second. And from is there anything on the operating cash flow side you can mention? When can we expect it getting positive?
Sir, already within May we have already collected around 60 to 65 crores from the debtors. So already debtors, what are trade receivables as on 31st March, to the extent of 65 crores is already collected. And maybe in another 15 days we will collect the balance amount also.
Okay, sir. Thank you. This was from my side. Thank you, sir.
Yes. Thank you, sir.
Thank you. Next question comes from the line of Ashish Khurana with A&K Capital. Please go ahead.
Thank you for the opportunity, sir. Happy afternoon.
Happy afternoon.
My compliments again on good P&L.
Thank you, sir.
Sir, so I know that you have commented on the order inflow. Just, some elaboration on it. So I think since November, if we see, probably we have gotten lesser than 100 crores of orders, and our pipeline has been 15,000 crore plus since that time. And you mentioned that the demand environment is strong, but probably you also yourself, would not be that happy with conversion. So just wanted to understand in a more elaborate way, are there internal reasons, external reasons on why, this conversion has slowed down? If you can throw some more light on that.
Sir, as you all know that now from March 2026 in India, most of the investors, including you, might be having second thought what's happening in India. There are just the pause button, the investments perspective, they have a second thought how it is the market. The steel price have gone up to per ton 12,000 rupees cost escalation, and market cost escalation gone up to 5 to 6% of the cost per square foot. So obviously, when it comes to investors, they expect the war should come down and they expect that normal price. It was earlier 60,000 rupees ton become 75,000. Now that it has come down to 60,000. So obviously, the thing is that everyone wanted a reasonable price. Even our own PEB factory, we had waited, and now only we are starting with the PEB proceeding. The purpose, we don't want to invest 10,000 rupees per ton during the war time, because the tonnage cost is gone up to 15,000 rupees per metric ton. So the intention, the purpose of sharing all this, when Sathlokhar itself had a plan to inaugurate the factory by 30th August, we ourselves have pressed the pause button for 45 to 60 days to see that the prices have come down to invest and then execute the projects. Same way, all the investors are also with the same thought process, and I'm sure from June onwards, things will change and everybody looking at the opportunity cost instead of waiting cost.
Got it. So, sir, Reliance recently, I think, in their commentary, were very bullish on their consumer segment, especially the cold drink. And they are looking to, grow multifold as per the commentary in next 2 to 3 years. So do we continue expecting good orders from them? Are they happy with our work, our costing and all that?
Sir, the last 3+ years, we are continuously executing Reliance, especially Campa Cola from Reliance Consumer Products, and I'm sure this year they have planned for 4 or 5 locations. They have scheduled the projects. I'm sure we are the successful construction partner, as we have been executed the project within 198 days. We have fast track construction even in the tough time. 5 states we had elections. Even this tough time, they had ensured that they would be operating and started taking juice from June first week onwards from the Kurnool factory. To protection, we had extended a better collaboration with Reliance. I'm sure we'll be getting out of 4 or 5 projects, 2 projects are expected for Sathlokhar. That's what our confidence are. We are working with the management.
Understood. That is good to know. And sir, so you talked about rising input costs. So just some light on how the contracts are structured. So is there a pass-through clause, or do we hedge raw material in some way? So how do we deal with this increasing cost?
As you all know that, as you correctly mentioned, we had booked a majority of the orders last year, third quarter itself we had procured, and that's the reason, with the blessings of God, we are not facing any challenges on the cost escalation front for the ongoing projects. When it comes to new projects, we all have quoted the current market price. That is the reason all the clients are carefully watching and understanding the prices of per ton from 56,000 to 66,000 to 76. So they are all the range of when the price definitely will not come back to the old position of 56,000 per metric ton. So it will be between 60 to 70K. So the message here is that we carefully protect all our purchase material costs during the award of contract, even if we lost the material basic cost. Even some of the clients where we have a basic price escalation clause is there. Some of the clients we have a standard system wherein up to 3% we can manage, beyond 3% we have to request for the price escalation from the client. Same way, when there are reductions also, we have to pass the benefit to the client. To that section, Sathlokhar and all the clients are highly win-win situation. We have prepared and we are working with our clients.
Okay, sir, understand. And just two more quick questions. So, sir, on the PEB factory, so I think we are investing 50 crores. So how much revenue can we do from it? I think this year, probably if we do 1,400 crores, by your calculation, if 35% is PEB, it is 500 crores, but I understand factory will maybe start in mid-year. But in general, from 50 crores, how much revenue can be derived?
Sir, our way forward, the business model, each PEB factory should ensure minimum 250 to maximum 300 crore turnover from the factory. To that section we are preparing. That's the reason we have now benchmark. Every year we should have one PEB factory geographically, not to the neighboring states. We have a strong plan to have 6 PEB factories across India. For that, the first pathway is our first factory is under construction. Once it is completed, each factory should ensure 250 to 300 crore turnover from that facility itself.
Noted, sir. So lastly, on working capital side, so I see if I obviously include the unbilled revenue, because that is also, in a way, part of working capital. So it is now in the 35 to 40% range. So I just wanted to understand, so a lot of our capital, I think even debt we have taken, even the preferential, a lot of it has gone into it. So I just wanted to understand what are the steps to bring it down. And secondly, on the PEB factory, I think in one of the earlier calls you had mentioned that the players we give orders to take 10-20% advance. So will that saving also come in our working capital once we start putting these PEB factories?
Yes, sir. It's definitely we take support from the clients. And also, sir, in our business model, as I repeatedly mentioned, our business model in such a way that definitely 40% of the unbilled would be there for sure throughout the journey of this business. In our business model in such a way that because we are now booking the orders, majority of the projects as a turnkey basis, when the project is fully completed, including their machines are up and run, because we are not only restricted to as a civil contractor, as a PEB contractor, we are as a turnkey contractor. When it comes to turnkey, they expect their machines to be positioned and with the power, with the water, with the air and all the piping process, everything should be there. Then only they are in such a way that the focus and Sathlokhar focus also towards their clients' focus. End of the day, they need to press the button and start commencing the operations. For example, Campa Cola, they are happy the day they press the button and start taking the juice from the Campa Cola factory. To that section, there is something with us and with the client. So this is our fate and this is our business model wherein the unbilled would be there forever.
Yes, sir. Just one clarification. So if we do our own PEB and don't give orders to other PEB companies, we save on some advance that we give to them, right? Maybe 10-20% of the orders. So that saving we anyways can have.
Sir, within the Sathlokhar, yes, we ensure like a capital good. When it comes to others, we receive money, then only we unload our fabricated finished product to any of the clients. Without receipt of money, we will not deliver.
Okay, got it, sir. All the best and really hope that we can do 1,400 crores in this financial year. Thank you so much.
Thanks a lot, sir. One thing I would like to highlight, it's a PEB, metal building, is the way forward, like a capital goods like generator, transformers, the way in which we all pay money and then get the unloaded, the finished transformer, finished capital goods like compressor, generator. Same way, PEB is also viewed by all the customers in India.
Sure, sir. Understand. Thank you so much.
Thank you so much, sir.
Thank you. Next question comes from the line of Dixit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. Firstly, in terms of this other current asset, 260 to 50 crore of unbilled revenue. So, so have we already billed it now in April, May?
The unbilled is work done, but wanting clients' approvals for raising the bills and the appropriate stage comes.
Okay. And In terms of order book, so a question similar to one of the previous participant, in last 6-7 months, we haven't received much order. Let's say 100 to 120 crore order when we have done. So considering and since almost 3 presentations, we have bidded for projects worth upwards of 15,000 crore. So I fail to understand that, let's say, when it was Q2 presentation, the 15,000 crore worth of order where we have put in our bid, how much time it takes to, finalize the bid? Because I'm sure the 15,000 crore which we would have bidded in September, October, so at least 7,000 crore must have been order finalized in last 6-7 months. So why the order book has not gone up? And also, let's say when we say this 20,000 crore of order we have bidded right now, if you can broadly touch upon, let's say in next 1 month or 2 months, how much of these tenders will be finalized? Like they will announce that whether it is a Sathlokhar or any other party which have received the award.
Sir, thank you very much, sir, for the elaborated questions. I would like to put forth like this. For example, sir, now we are currently executing Reliance project at Kurnool. We all know that there is a food park which is expected in the same, not exactly on the same neighboring premises where they already acquired 100+ acres. Knowingly, if I shift those people to another place wherein I'll be losing that opportunity, and we all know that Reliance is going to grow in next 3 to 4 years, almost 25 factories they have planned across India with their own model as well as franchisee model. The point here why I am trying to mention, wherever we execute projects including Reliance consumer products, Godrej also now going for expansion, and where we are now currently. Winfast also now expanding, Pouchen, Taiwanese companies also expanding, Humfu, Taiwanese group is also expanding, Dean Shoes, Taiwanese group is expanding, and Apollo Tires, all wherever we are now executing, knowingly, we know that when we complete this project by June, July, we'll be getting the further buildings. That's the reason we are confidently, carefully valuing the customer relationship and also understanding the customer requirements as verbal confirmations given to us. We are, according to me, it is only 7 in our books, confirmed order book 715. In my own eyes, my guidance is 70% because of the existing clients itself. We are pretty confident that we'll hit again under 600 crore within the financial year. We'll book as well as raise bill and turnover will be achieved. That's the reason we are confidently saying that our turnover would be for this financial guidance is 70 crore. The message here is that last 4-5 months, it is true that 6 states elections have happened and most of the locations geographically and also war also happened. And when it comes to investors' perspective, even GDP of last 3 to 4 months in India, slower than the last till September, October. After the, specifically the first quarter of this financial year have come to the stage wherein it is not near to the pause button, it is almost an halt situation, wherein all the customers, investors carefully strategizing their investments, the bank loans to avoid interest. Now that I'm sure we are confident that people who have invested on the land parcel, for sure, as we already designed, submitted quotations, and they are also in touch with us. Now that last 30 days, we see a different perspective from the clients. We are confident that we'll be booking orders, as we have mentioned. Same similar phase of life we have faced 1st April 2025 when begin the last financial year 300 plus, whereas we have started now 700 plus. For sure, we will hit our guidance above 70% for this financial year, sir.
I completely trust you. Let's say you will be able to do that, and you have done it in the past as well. But I just fail to understand. Let's say you mentioned that you expect 500 to 600 crore kind of order from the repeat customer, your existing customers. But let's say your eligibility is say 10% or 15% of the whatever you bid. So this 500-600 crore order is translate to 5,000-6,000 crore of bid. But this 19,000 crore, there must be many orders which are not our existing client as well. So, I just feel if you can just broadly give some timeline, let's say, of this 19,000 crore of bid pipeline, how much of the, let's say, will just an example, say 5,000 crore of order, the client will finalize by June end, or 5,000 crore of order will be finalized by July end. So because client must be having some deadline that okay, we have received the 10 bid from 10 bidders, and we will open and finalize the bid say by 15th of June or 20th June, because 15,000 crore is bid pipeline since last 3 quarters, and we have been only 100 crore. So if I translate your success rate to 10%, you are saying that out of 15,000 crore of bid pipeline in September, only 1,000 crore have been finalized. So I'm just able to understand that point.
Sir, just wanted to give you, if you are, I think you can just type that Google. You can just type and see that who is the successful contract for Tidal Hosur project award and contract name. The message here is that we have bidded the 365 crore worth of order about to award in March 2026. Whereas because of the election, now that new government is changed, as per procedure, as per legal, we are a L1 contractor. If you would have received that order, by this time you wouldn't have raised this question. The message here is that we have been expecting this order from March 2026. Even now, you can just Google down, you can type your own way like Tidal Hosur awarded to which contractor name, you can see that. Because normally when it comes to government tender practices, the L1 would be the successful contractor. According to me, if you would have received that order in the month of March 2026, this question wouldn't have raised. The message here is that we have been waiting to receive this order. Almost last 3 months is gone. Even now we are pretty confident that because once we book and wherever we get that green signal, those orders become in our city. We are responsible to handle and ensure the laborers and construction teams to deploy and execute the project. We are confident in booking almost 500 crore worth of orders being shifted and postponed. Now that they are pretty confident that June, July, we've been in a position to book good amount of orders that will cater for this financial guidance, and as well as for the overall year, we'll book the next year proceedings also successfully, sir.
Okay. Because see, my question was also because you have previously guided that typically our execution is like once we receive the order, 3 to 6 months goes to all the approvals and all, and then 3 to 6 months of execution. So if we don't get orders in Q1, then execution will shift to the next year's Q1. So that was the...
Sir, I appreciate your question, sir. At this juncture, the Q1 and Q2, with the blessings of God, we have got sufficient orders. Our focus is predominantly to push Q3, Q4 and next year, sir. That's what Sathlokhar as a management promoters and the business development, everybody is working to book for our Q3, Q4 as well as the next financial year. So we are targeting for the current ongoing Q1, Q2, we have been fully blessed by God and we are working towards that.
Okay. That's it from my side. Thank you.
Thank you, sir.
Thank you. Next question comes from the line of Akash Srivastava, an individual investor. Please go ahead. Mr. Srivastava, please go ahead with the question.
Hello, sir.
Yes, Mr. Srivastava, please go ahead with the question. Since there is no reply from the line of Mr. Srivastava, we'll move to the next participant. Also, a reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Tejas Thakur, an individual investor. Please go ahead.
Yes, thank you for the opportunity and happy afternoon.
Happy afternoon, sir. Yeah, go ahead, sir.
I just one request to Kirin Advisor team. It's better if you can have questions listed from the beginning so that all of us can get a proper opportunity to ask. I think rather than, the early participants get an advantage where we are not able to then ask our questions. If you can consider this going forward, that'll be great. Sir, just a couple of questions. One is regarding the order book. Last year we had closed at about order book of about 800 crores, March 25, that is. March 26, we have closed at 717 crores. So it's a flattish or a decline, I would say. And if you see as per the order book guidance, the details that you had given us, so the H2 order book billing was supposed to be around 717 CR. In H2 26, we have billed about 540 crores is what we have billed. And and if we see that our pending order book, another is about 343 crores is pending. So, but you are talking about 741 CR. So there has been some deferment of orders that we are supposed to close and we haven't closed in March 26. We've not billed. So sometimes that has happened because like any big orders like 236 crores of Reliance order or something that has been pending, because the order book tallying numbers are not getting tallying accordingly, sir.
No, as such, but the works to be executed, as you mentioned, 715 is there from April 1st. And even when it comes to Q1, for sure, at this juncture for Q1, Q2, we have works to execute and raise bill. And one thing I would like to highlight, on 1st April 2025, the carry forward order was 300 plus. And as you mentioned, 800 were not there. So the message here is that our request to consider on the 1st April 2025, we had only 300 plus crores worth of orders when we begin the last financial year, and subsequently we booked September, October, November, then December, and as well as April 1st. There are 3 months, there is a pause button from December, January, February. This is a gap. Yes, sir.
Okay, so I stand corrected. So that is 300. So, but this order book, so that number is still not tallying. So 717 CR was H2 we were supposed to do 717 CR. We have billed 540 CR. So that's a gap of around 180 CR roughly.
Sir, the entire financial year FY26 cumulatively 823.56 less the earlier 1,700. 1,700 less 823.56 is 715 is the outstanding, sir.
Sir, what I'll do is, sir, previously also I requested, I'll send you the email. If you can just look into it and let me know where it is, if you can give me some clarification. Send me the order book email.
Yeah, sure, sir. We'll ensure.
So, okay. So, second question was on the margin, sir. I think we have our EBITDA has gone down from 15 to 14.5 or 14.5 to 14%. Now, obviously, because of all the RM cost inflation, where do we see our margins being next year, sir? Do you think it will be remaining at 14? Can we improve it? Will it be stable at 14? Because it seems like even this current year is going to be inflationary. Or are we trying to improve it?
Sir, we are trying to improve in many ways, but I am unable to predict the market price fluctuations. I am not want to comment. At the same time, we are positive that we already have run through the tough phase from December, from March and April, May. I think this is a worst tough phase wherein we are unable to understand the price fluctuation between the weeks and months because most of the items are from steel, reinforcement steel as well as steel, material steeling. The major challenge is purling coil. That's because the monopoly wherein only Jindal is the manufacturer. So we are unable to predict the price fluctuation, but we are pretty confident that at this juncture the price wherever whomsoever we have bidded, we have carefully submitted the quotation based on the current prices so that we will manage. Even if there are any uncertainties, as soon as we book the order, we will immediately protect the basic material cost. And also price fluctuation clause is also being ensured with our clients.
So at least we'll be able to maintain the current margin. Can we take that?
Yeah, yeah. Yes, sir.
Okay, sir. Thank you. That's all from my side.
Thank you, sir.
Thank you. Next question comes from the line of Kaivalya, an individual investor. Please go ahead.
Hello, am I audible? Hello?
Yes, sir. Go ahead, sir. Happy afternoon.
Happy afternoon, sir. Congratulations for a great set of numbers.
Thank you.
I had one question mainly. So, I saw the operating cash flow, which is 163 crores negative for this year, and it has worsened compared to last year. So, sir, I just wanted to know what's the main reason behind this, like where the cash is getting stuck. Is it working capital or something else? If you can specify, sir.
The main reason being, sir, increase in the unbilled revenue, sir, compared to the last year. So because of that, there is a increase in the numbers.
Sir, can you give me any numbers specific, like how much there is?
The unbilled revenue, sir, the closing number for the unbilled revenue is 234 crores, sir. And the other, yeah.
Okay. So I had one question on CapEx, like this plant is going to commence operation from September, right?
Yes, sir.
So what's the next stage you guys are planning to, like, what is the next stage? Which plant, if you are going to, what the CapEx is?
No, the plan is to see. Recently, I have been to meet industry minister at Odisha. We have some plans to put up a new PEB factory at Odisha, sir. Next plan is that.
Okay, sir. So you're thinking about Odisha?
Yeah. We have been met governor last week. Been to meet industry minister at Odisha. Also, governor, we have requested for support the local, wherein we are eager to know plan for a PEB facility over there by next financial year.
And sir, what will be the capex? Any number if you have thought about, the company has thought about?
Sir, the plan is we are aiming to have 4 lines means 250 crore turnover per annum, and 2 lines means 120 crore turnover per annum. That's what we are working towards it.
Okay, sir. Thank you, sir. Congratulations.
Thank you. The next question comes from the line of Tahir Hyderabadwala with Globus Fund. Please go back.
Hi, sir. Thank you again for
Hello, happy afternoon. Yes, sir. Go ahead, sir.
Sir, I have just one question regarding the war. Is there any impact creating on our margins for FY27 going forward? You see, due to lack of plant completion due to this war situation, any customer lacking their expansion plans or delaying the capex which the customer has done? So, any view on that part?
Sir, just to give you clarity, even you become a client, you would not be invest in cost per ton when the price is gone up 15,000 rupees per ton, sir. So obviously you will try to reduce the cost, or you will try to wait for some months to initiate the investment. That's the area where all the clients are carefully now moving. Of course, the projects, wherever there is an opportunity cost. For example, I would like to highlight, for Mr. Muthiah Murugan, he would like to have a can manufacturing facility in India. Initially, he said, Mr. Thiagu, wait for 30 days. Now he has, last month he called me, he don't want to wait any further because he is losing the opportunity cost when it comes to can manufacturing facility in India. The message here is that clients are different perspective because their own opportunity cost versus time cost. So they are looking at opportunity cost is better than the waiting time. That's what I understand. Even now Sri Lanka, in fact, again, I am happy to announce that Mr. Muthiah Murugan had called me and given me escalation price also recently. Mr. Thiagu, kindly not to wait, please go ahead and complete the project. August handover and December handover of can manufacturing. So the clients are different mindset in investment because their own business model, whereas they want to have they are looking at the opportunity cost. When it comes to can manufacturing in India, obviously only 2 to 3 players are there. So he don't want to wait until the price come down to a normal position. So different clients, different expectation, boss.
Okay, sir. Okay. That was from my side. Thank you again.
Thank you. Next question comes from the line of Niklesh Sahani, an individual investor.
Good afternoon, sir.
Happy afternoon. Yeah, go ahead, sir.
Yeah, congratulations on a great set of numbers. I think
Thank you very much.
My question was answered in detail by you already, which was asked by the previous participants. So I have nothing more to add. Just one query, sir. Are we still on track as far as our migration to mainboard is concerned next year, when we'll be completing 3 years?
Yes. We are working towards it. Our goal and dream is to convert into mainboard. We are working towards it. Hopefully, we have listed 6th August 2024. We are aiming to become by 27-28 years, we become mainboard, sir. We are working to. That's the reason everything is working.
Yeah, because the like-minded companies will need like-minded investors for a
Thanks a lot,
long-term this thing.
You are very positive, and thank you so much.
No, indeed, because we have seen the kind of volatility and what we are seeing in the SME segment, and with the in-depth and hard work which Sathlokhar and the team is doing, the faster we are able to move to main board, the quicker it will be, the efforts will be quickly recognized. So I think it's important that we keep that focus on track.
Thanks a lot, sir. Thank you so much for so much energy in your communication, and we are pretty positive, and we welcome that, sir. Thank you.
Thank you. Wishing you and your team all the very best, sir. Thank you.
Thanks a lot, sir. Thank you so much.
Thank you. Next question comes from the line of Anboli, an individual investor. Please go ahead.
Hello.
Yeah, happy afternoon, sir.
Good morning, sir. Good morning. So good afternoon.
Go ahead, sir.
Sir, what is the strategy behind PEB plant in Odisha?
Sir, give you brief, like as of now, there is no big players in Odisha. In India, after Modi ji has taken over Odisha last 2+ years, lot of companies have acquired the properties, lands in Odisha, and last 10 years, lot of developments happening when it comes to bridges, roads, highways, when it comes to Odisha. According to me, my survey says it is going to be like yet another Pune in next 1 decade, sir, Odisha. So we are all working towards it. For us, it's a neighboring state, very friendly, max 1 hour 55 minutes travel time by flight, and very friendly at this juncture, and we are very positive in proceeding with Odisha for further development. According to me, so many garments factories are coming up, PepsiCo, Coca-Cola, even Campa-Cola, everybody have invested land parcel. For sure, once we put up the PEB factory at Odisha, we become a early bird, wherein there is no top-notch companies as well as even a middle-range PEB manufacturing facilities in Odisha. So our aim is to have a next factory in Odisha right after the Chennai completion. For sure, another 20+ years, that factory would be scaled up from 2 lanes to 4 lanes, 4 lanes to 8 lanes. To that extent, the growth of Odisha is being foreseen, sir.
So land has been purchased, right?
Yeah. No, sir. We are now in the pipeline. We are in touch with the industry minister and even met the governor. A lot of industries are there for a lot of expansion, investments from other countries, especially government sector. A lot of investments have been made from my own employer, Mass Holdings, so many other government group from branding. Everybody have invested. Our own even beverage industry is highly focused. PepsiCo, Coca-Cola, now Campa-Cola, everybody is now looking at Odisha in a long way, sir.
Since raw material price has been increased, do we face any difficulties in passing on to our customers, as well as how much of them we have been successfully passed on to our clients?
Sir, most of the clients have agreed to pay the price escalation wherever we are now executing. 2 to 3 clients are said, Mr. Tyagu, we are unable to pay the escalation, but we also mentioned, sir, if you are prepared to give extension of time without price escalation, we can wait. Otherwise, you have expected to give price escalation. Then they mentioned, some of the clients, they said, okay, fine to wait for 30 days. Then after waiting also, they have concluded maybe they have achieved 3,000, 4,000 rupees come down from the earlier price. So that's the benefit they are getting. Even we had communicated to all our clients, if you want us to wait for some more time, we are open. But subject to, you have to give us the extension of time. So to that extent, we are carefully working with our, but many clients have given green signal to give price escalation because the price escalation clause has been already replied in our order.
Why I'm asking you this question is because just we'll be in a contract, just we'll be mentioning our escalation clause, right?
Yeah.
Okay. So going forward also we can see same kind of thing, right?
Yes, sir. Even if you ask me to construct euro, I will come with the basic price escalation clause, or else I will ask you to pay a huge amount of money to protect steel and cement immediately.
Okay, sir. I myself is civil engineer, sir. Thank you.
Thanks for that, sir. I welcome that, sir. I understood also the way in which you are engineering background.
Thank you.
Thank you.
Thank you. Next question
Thank you.
comes from the line of Tejas Thakur, individual investor. Please go ahead.
Thank you for the opportunity again.
Yes, sir. Happy to, sir.
You had mentioned that you've kept currently you're watching the PEB factory and therefore you are just temporarily you've put it on hold, not hold, but defer it to see how the price escalation and the RM issues settle down. So now that you have
Sir, just to give you clarity,
yeah,
I never say, I have mentioned that we have strategically handled the PEB material procurement in such a way that we pass button. Now that we geared up and we are aiming to inaugurate the factory August, and we are sure that we'll be started producing the PEB from September. We just mentioned within the stipulated project time, we also allowed the prices to come down. Instead of paying a huge difference, we don't want to pay. That's what I mentioned.
Okay, sir. I stand corrected, sir. So,
thank you.
So now with this September thing, is that a final date, or is there still there's some room for some some elasticity that you might still take it forward or behind, or you're like that said that September, no matter what, we are going to inaugurate?
I will welcome you to our factory by September. You can out and witness the factory production operations from September 2026.
Okay, I love that, sir. If you can invite us investors over there. Thank you so much.
Kindly share me your contact number. I will see that you will be personally coming and visiting us, sir.
Okay, thank you, sir. I'll send you a mail regarding these queries, sir. Thank you so much.
Please, sir. Please welcome, sir. So, seeing is believing, sir. Always when it comes to investors, more you see, you have more confidence built. Even welcome to our Kurnool factory, welcome to Mysore factory, welcome to Pune factory, welcome to Windpass, welcome to Hampu, wherever we exist. Because once we witness, you understand, today world, the EPC players in India is very minimal. I would again highlight your engineering, procurement, construction of turnkey project, construction companies in India is very minimal, and the commitment to honor also very minimal. Whereas we are now benchmarked as a construction partner for EPC players, such a reputed companies. We are working with all the multinational companies, and even our investments, as I mentioned, all the airports, wherever you go, like 7, 8 locations, we have given airport advertisement and road industrial corridor advertisement, local pay printer. We have got more than 20,000 plus leads are there. Our confidence level for next 1 decade, with the blessings of God, Sathlokhar is ensuring the yearly requirement. Even our own existing clients will cater, as I mentioned, one of the previous meeting, 40 to 50% of growth from our existing clients itself. The dream is today we have plus 100 plus clients are now working, and our dream is to have 300 plus clients. The moment 300 plus clients in our profile, for sure the Sathlokhar will cater 60 to 70% of yearly turnover from the existing customers itself, sir.
So I'm very confident that you will deliver to what you have mentioned, and believing, so we always have believed in Sathlokhar. That's why we invested before even.
Thanks a lot, sir. Thank you so much. More positivity, yes, sir.
Yes, thank you so much, sir. Thank you.
Mr. Agastya, please go ahead with your question.
Hello.
Yeah. Happy afternoon. How are you, sir? Go ahead, sir.
Happy afternoon. I just have I have two questions. One is that what is the incremental working capital to sales required? Like, for example, there is a 1 rupee sales increment, then how much investment in working capital is required to generate that 1 rupee sale increment? As far as I know, historically it has been roughly 40%, which is a constraint on growth.
Sir, in our business model, as I mentioned, to achieve 100 crores, we need to have a 25%, sir. 25 crore.
Right. Okay, 25 crore. Okay, and how does Sathlokhar plan to turn into OCF positive? Is the steady state OCF positive as of now?
Sorry?
How does Sathlokhar plan to turn OCF positive?
Sir, actually speaking, in construction business, sir, once we raise the bill, the certification will take 3 to 4 weeks, and the processing payment would be taking 45 to 60 days. So, according to our company, when we raise the bill, we'll be getting the payment max 60 to 75 days, maximum 19th day we'll be getting the payment. Not like older days, 135 days, those days are gone. Nowadays, we'll be getting the payments. See, once we raise the bill certification process is taking 2 to 3 weeks time. And upon certification and submission of bill, we'll be getting the payments 60 to maximum 75 days, sir.
Okay. So, as per like, okay, so it's an industry norm. Is that what?
No, we don't see any, our business model, the amount what we receive, it's a standard of our EPC model, sir. We don't see any challenges. According to us, it's a habitualized and it is quite natural in our business model.
Okay. Because like some other EPC players are showing a positive OCF, for instance. So is there some, like, can we like prepone billing?
Sir, in first place, sir, even a pen manufacturing company is also saying EPC pen manufacturing company. We are talking about EPC industrial construction companies model, wherein EPC is a generic word. Even when the stapler is being prepared, you can say that EPC turnkey stapler manufacturing company. The point here is that we are talking about engineering, procurement, construction of industrial and infrastructure and logistic part construction, sir. We are not general EPC, and our EPC model is completely different. You can even not to compare with the PEB company, because we take care of complete responsibility from the barren land to starting from design, approvals and turnkey construction of civil, PEB, electrical, mechanical, plumbing, firefighting, everything under one shoulder. So that's a commitment. That's what I mentioned. In India, the reputed EPC turnkey construction partners are very minimal, and some of the places where the competitive business wherein very minimal competitive, whereas only the reference and the confidence level by the customer is very important to honor the commitment of the factory on time.
Right. And do we foresee any competition like in our space or?
Sir, there are competitors in every business, but of course we do have competitors. The strength of the Sathlokhar is the promoters and the key professionals working in the company having more than 20 plus, 30 plus experienced people are also serving with us, and we are pretty strong in handling 5,500 laborers are serving with us. In our business model, only 30 to 35% is the labor extensive business, wherein civil sector is 35%. Apart from the civil, we have got automation in terms of PEB and also electrical own design and execution team, firefighting own design and execution team. When it comes to electrical, we are not going to manufacture transformer, cables, panels, so everything is already fabricated OEMs available materials. We just design, trading, procure and install. When it comes to electrical, this is the same way. Air conditioning also, we are going to just purchase a air conditioning unit, fan unit, ducting. And when it comes to firefighting, we procure the pipes, and similarly CCTV, fire alarm, everything we procure and execute the project. We are pretty confident in execution of the strength of the company. We are pretty strong in design, licensing and also turnkey construction in-house team. That's the area where we are successfully executing projects in a short span. We have got 100 plus clients are there because we are pretty strong in execution, commitment to honor. From the barren land to till inauguration of the factory is our commitment to all our customers.
Right. And sir, just one last question. Sir, I saw the Tidal Park Limited, like the contract Sathlokhar one, and congrats on that. But over there,
sir,
the design partner, someone else.
I would like to highlight in this forum, according to as per law, we are the L1. We have to receive that order. We are waiting for the new government settle down, and once they conduct the meetings, they will announce the L1 contract. This is the regular practice. That is the reason I said, whoever is Google now, they can see that Tidal also is awarded to Sathlokhar, because in such a way that across India, any state, when the government project went a tender, whoever is the L1, they would be awarded. With that nature, with the confidence, with the prayer, I expect the new government award the contract sooner in June, July.
Right. But sir, the design partner, there is someone else, right? So will that
sir,
increase the
I have been mentioning as a Sathlokhar, we are benchmarks for design and build industrial construction of factories. When it comes to factories, factory means anything and everything, whether plastic manufacturing, garments or beverage or auto components or food industry or for us, it's a factory. Length and width and matters. Height of the buildings matters, floor loading matters, wind speed matters, collateral load matters. we don't mind what is going to be produced inside the factory. So the message here is that they are pretty strong in design and construction of industrial warehouse and those kind of benchmark company. When it comes to high-rise building, when it comes to government projects, of course, they do have a design company separately, project management company separately, and construction partner separately. The advantages for Sathlokhar, when the tender of title is being floated, they have given 3-4 benchmarks to participate in the contract. They have set 242 crores turnover of the company, and out of 242 crores, 95 crores MEP has to be ensured within the out of 242. The company should have Class 1A contracting company. Also, company should have a ESA grade contracting. The company should have a solvency capability of giving 150 crore. All these 5 credentials. Out of this, the entire Tamil Nadu state, we were the only contractor who have bidded. The other competitor company from Maharashtra, the other one is from Kerala. When it comes to technically, when the bidding is happened in Tamil Nadu, Sathlokhar was the only contractor participant because of the set benchmark of the turnover and PEB expectation and ESA grade electrical expectation and Class 1 PWD expectation and solvency expectation. The message here is that on that tender process, Sathlokhar won the technically clear, and then even financially Sathlokhar became L1, and we also meeting the tender cost of 300 plus crores before GST. So with that front, we are pretty confident that we will be getting that order to us. When it comes to high-rise building, government sectors such a way that they don't give design and build on the same contractor. There is a procedure that design should be one company, and the design bidding from the another company, project management another company, and EPC turnkey construction by Sathlokhar. Here the advantage for Sathlokhar is we have taken civil, we have participated civil, electrical, mechanical, air conditioning, firefighting, DT, ETP, WTP, everything we have taken, including facade, glass works, turnkey is being allotted to Sathlokhar. Hopefully we will be getting the order soon.
Right. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I now hand the conference over to Parth Acharya for closing comments.
Thank you everyone for joining the conference call of Sathlokhar Synergies E&C Global Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your line.